Hello and welcome to NDTV Profit. You're joining us on the beaches of Kovalam in Kerala, and we are here at the invitation of Credit Saison, Credit Saison India, which is a fairly strong growing NBFC here in India now. I have with me Kosuke Mori-san and of course Prashant Paragash. I'm glad that I could come down and speak with you. But let me start a little bit about Credit Saison, the entry into India, and the kind of experiences you have. So I'll start with you, Mori-san. Well, the first question is with regard to what exactly prompted you to start a non-bank finance company here in India?
Yes, so about 10 years ago, Credit Saison decided to expand outside of Japan. Back then, it was only domestic business, but we are one of the largest NBFC that do business in Japan. But 10 years ago, we started from Southeast Asia, and we made some successes over there. But then, roughly 5 years ago, 2018, we took notice of this development of this fintech ecosystem and all the India stack digital infrastructure that enables the digital lending coming up. And I was, quite impressed with this, growing ecosystem, and also with a clear sort of regulatory framework, et cetera. We decided that it's a great potential, and we can set it up and create a partnership model where we can grow with partners together. So that's kind of how we took notice of India, as well as the timing wise. Back then we decided to enter.
Okay. Prashant, question for you. So your background is that you started your own company and then you moved in as a professional CEO for this company, Credit Saison India. To your mind, what exactly first attracted you to this proposition? And secondly, in terms of the way that Credit Saison India has evolved, 2019 is when the company started operations. In these 5 years, how do you think that has panned out?
Sure. So I think, two parts to it, right? So I think, what really attracted me was kind of the vision of what we can build together. And, I think what we saw that was very exciting is that this is a very unique combination, right? So because of, sort of the capital and the parentage that we have, that can be sort of the tremendous support and the platform. But what also, works really well as a combination is that this combination will be supported with sort of the local management team, right? And the local management team can sort of operate with sort of a founder's mindset. And that's truly powerful because, you have a backing of a global parent which comes with the thinking of how we want to build a big business, joined together with sort of this founder's mindset of the local management team in order to be able to build out the business. Now, coming towards the business as well, so as Mori-san mentioned, as we entered pretty much on the partnership model, right? So we do wholesale lending to other NBFCs. We did do sort of co-lending, fintech partnerships and everything. But coming back to my earlier statement as well, the vision in India was very much that we want to build sort of a large book here. Right. And in order to build a large book, you have to go direct to the consumer. So it took us sort of about 2.5 years to build the capabilities on our own underwriting, our own servicing, our own collections, right? And lending is all about how much you can collect back and all. And that sort of really gave us the confidence to launch our direct lending as well. So, today, while, we started with the partnership model, the loan book is also very much on us lending directly to consumers, directly to MSME and all also in that sense.
Okay. Mori-san, you're heading the global business for Credit Saison, and you've seen businesses grow for the company in countries, other Southeast Asian countries, Indonesia, Thailand, if I'm not wrong. Now, after India, you've also gone to Brazil and Mexico, the Americas. But how exactly are you seeing this global development, and where does India fit into this entire global plan?
Right. So currently, our global strategy is to basically identify the growing emerging markets where again, regulatory framework and the basic finance infrastructure, like credit bureau or the payments and those, and then large enough market where we can really, make some impact.
Right.
So these are the kind of criteria that we chose this market that you mentioned. And starting point is to work with local lenders and then work with them, learn from them, and grow together.
Okay.
And then, but eventually, we like to be, we enter the market with a very long-term point of view. And so, and then we're patient and we don't optimize our success on a short term, right? So in that sense, we take time in learning, but growing with the ecosystem, and then going to the next step. And that's really starting to pan out in India. And so to your point about how India is sort of playing out in this global strategy, actually India is leading to prove the hypothesis of this two-phase entry where, okay, enter into the market on a partnership model and then going directly to the end, consumers and SMEs. Yeah. And the thesis behind emerging market, this model is the financial inclusion piece.
Okay.
Because as an NBFC, also in Japan, we're always in the front line to really face the unmet needs or unmet underserved segments that a bank cannot, for different reasons, cannot serve well. So if we apply that to the global, emerging market is the place where majority of the people are not salary, majority of the SMEs are, there's huge gap in terms of the credit supply and demand.
Right.
So that's kind of, that's an underlying theme. And then the strategy that I just described. And India is actually really starting to prove this hypothesis.
All right. Financial inclusion, that's mostly what's driving a lot of the India strategy here. Prashant, you're the person who's actually executing all of this in this country right now. I wanted to get your view on the dynamics of the Indian market, which are really working for Credit Saison in India. How you mentioned the entry into direct lending. Now, direct lending, as you said, collections is a very important piece of this entire strategy. How have you looked at the dynamics in India and how have you evolved your business accordingly?
Sure. So I think if you look at the dynamics in India, right, and I think if you look at the two kind of key segments that we're playing in, so I think the first segment is definitely on the consumer side, right? So I think in the consumer side, especially, on these sort of personal loans and everything, I think the first thing is there's two parts, right? I think one is that definitely there's been a significant increase for, personal loans and all. But I think the key factor is that, it's also acknowledging the fact that it's very much a consumption-led demand, right? Today, the modern, Indian person is very different to how it was 10, 15 years ago. 10, 15 years ago, it might have been unthinkable to sort of take a loan to sort of buy a phone, right? But today, that's totally fine, right? And it's different because, for example, 10, 15 years ago, the priority could have been the fact that, you're focusing on getting, say, a home loan. But today, for example, the sort of the reasons behind the loan is quite different in that sense. So I think sort of the total mind shift of the consumer is very real. I think the second thing on the dynamics, which is very important on the consumer side, is that it's really a digital first proposition, right? I think the ability today to sort of get a loan in a sort of almost fully automated but fully compliant manner is very important, right? Today, the customer is getting offered through various channels. So the convenience factor is also very important in terms of how they are deciding on the loans. So that's on the consumer side. The other segment that we play very actively on is on the MSME side. But I think the segments within MSME that we're very bullish is really much more on the underserved side. So if you look at the underserved side, if you look at it, banks typically would focus on, your 65 million MSMEs. They would focus a lot more on, say, the 20-30%. But there's really that missing middle in terms of how are they going to get credit. Now, for them to get credit, there was, sort of few reasons why they've been left out, right? So the main reason was, how do you underwrite this? Underwriting a 50 lakh, MSME loan that you're giving versus a 5 lakh is very different.
Correct.
And I think why we're bullish on that also comes to how we have set up the entity.
Right.
We believe that, definitely we can use tech. We can use tech in the way we're building our underwriting models. There is a lot of today data that you can get, say, GST data. You can get your banking data, which helps us to automate the kind of scorecards that we built in order to really go after more of these micro SMEs,
Right.
which require credit as well. The second part of tech, which is also useful, is that the more of these things that you automate, the cost of underwriting also becomes far more efficient. Today, for example, the cost of doing a 50 lakh loan, you would put a physical credit manager there because it makes sense. But for the smaller ticket loans, for sort of that missing middle, if you can do a lot more things automated, right, that also helps to bring your cost of providing that loan, right? So
Right.
we're very bullish that we want to go after a lot more of the underserved, smaller MSMEs, focusing on tier 2, tier 3 to really enable credit for them, because they are the ones which are really fueling the economy, right? 25-30% of the economy is being driven on the MSME side. And of course, the smaller MSME is what we are bullish in terms of who we want to support as well.
Okay, fair enough. Marissa, the discussion around India is always supported by the fact that India is sort of leading the race as far as financial technology is concerned, whether it be UPI, account aggregation, you've got Aadhaar enabled payment systems, all of these different types of technologies which aid financial services companies in delivering services better. When you look at the role of these technological sort of advances and how that helps in growing business, how are you viewing the growth pattern here?
Right. First of all, that piece is critical because these days, again, maybe 20 years ago, without the smartphone, without this tech, without this data, digital footprints, yes, non-banks were filling the gap, but in a very manual way.
Correct.
Right? On the ground, on the street, on the point of sales, etc., etc. That was fine, but now what's really driving the financial inclusion is the utilization of this tech, right, and the data. So in that sense, what's really amazing in India is this, India stack, starting from Aadhaar, UPI, even the bureau, grew significantly, GST, accountability, all these things that enable these digital financial services.
Right.
And that is really the key for someone like us to, drive the growth. And the selection of the market that we are operating in today is also, that piece is also the critical piece. Yeah, because without that, the new age lenders, niche lenders, fintech lenders cannot grow. So that piece is very much critical to the growth. And it's quite interesting because on this digital side, India is really leapfrogging the physical infrastructure. You're starting to see many developments, but digital side, your country really leapfrogged and then lead in the world. So not in emerging market, even on a global level. So this is really, exciting, especially given that India is the biggest market from the population and potential volume.
You've laid out a path for the next 5 years now. Looking to now, you're at, as of March 24, you're at 12,000 crore as a loan book, and that's aimed to grow up to about 50,000 crore. That's your plan. How are you looking to achieve this? Because one argument that people would make is that India is a fairly competitive, busy credit market, and for a relatively new company, I mean, 5 years is not new, but relatively new companies, that growth path might be a little challenging. How would you address that?
Sure. So I think, I think for all the factors, that we sort of entered India as well, right? So one is we definitely believe that India is a fairly large market, right? So I think that's first the thesis that, it's a large market. Secondly, credit is definitely required. But I think when we think about growing also from, 12,000 to 50,000, I think we think about it that we also want to resiliently build the book up, right? So it's not just about, growth, but how do you back it that, you're scaling it out very carefully and everything. But I think what has really worked well as part of the strategy is that as a NBFC, in order to kind of grow that, you have to continuously be making the right investments of going into new loan products. So if we look at our own example, right? So as Marissa also mentioned, we started off with, just focusing on partnerships. But through partnerships, we started going after, for example, enabling a bit more, MSME credit.
Right.
Now we're looking at sort of new products, right? So secured is another big focus for us. We would look down the line to say, go into, say, an affordable housing product and everything as well. So I think the proposition of the growth is, really double downing on the segments that we are operating in, but also at the same token, sort of the new line of businesses, the new loan products that we would look to also go into. But all of this always with the mindset that, we're building a lending business where we want to make sure that the foundation is solid.
Correct.
And for us, the most important is making sure that we're resiliently sort of building up the book in that sense as well.
If I can add to your question, I think another piece is the like a global and localization. Many of or most of the competitors in India are actually domestic players or the India only play.
Yeah.
Whereas we are starting to see many of the exciting, other markets,
Right.
where there's a tremendous learning. For example, Brazil. What's happening in Brazil is equally exciting compared to India from a digital infrastructure and then digital financial services point of view. And there's a lot of learnings where, one thing can work in India, but, in other markets it doesn't work. Why? Right? If you really apply those global learnings and global sort of thing, I think we can have a, competitive edge against the competitors in that sense as well. Yeah.
Okay. One point that you were talking about at your presentation earlier was the fact that the quality of the book has been pristine so far. You've got zero DPD on the wholesale lending piece. Very marginal NPAs, so to say, on the other side of the story, consumer lending and your direct lending, which you're about to start. I want to understand from you. You mentioned collections. I want to bring the topic back. How are you seeing the future quality of this book that you're looking to leapfrog in the next 5 years? How exactly will that collection efficiency and the quality of that book be maintained?
Sure. So as I mentioned also, right, very key focus is as we scale up, ensuring that, we have the right controls and everything in that sense. But I think the way we see it as well, right, the whole underwriting process is actually a very much interlinked loop, right? So the way we think about it, right, first and foremost, we believe that, we are building the right underwriting models, right? So if we're focusing in an sort of an underserved segment, how do you underwrite that, right? What can you do better? And we believe, for example, that, we can build the right scorecards, the right policy and everything in that sense. The second part of it really comes towards the fact that how do you price for the risk as well, right? So if you're playing in a segment that is a bit more riskier, right? For example, do you price slightly higher to sort of factor in for the loss and all? But I think the third point, which we're very particular about, is really sort of putting a lot of emphasis on the early warning signals.
Okay.
Now, the minute we see that, okay, a little bit of worsening, right? Immediately, what is the pullback? And when we do that pullback, we're actually able to deploy the changes very quickly,
right,
because of the way that we've also built out our entire tech stack, our processes and everything, right?
Yeah.
So our models and all also can be quickly adapted in terms of making the changes, right? So that feedback loop of continuously, anything that we discover that requires us to make the pullback sort of comes the start then in terms of how are we underwriting and everything. Of course, no doubt that sort of the nail in the coffin is collections. We've invested a lot in our collections infrastructure, not just building out the team, but a lot of sort of things of what can be automated, right? So for example, the app that a collections guy uses, right? In terms of how are you sort of, getting the information and everything in that sense. So I think all of it comes together in terms of how we want to maintain the pristine quality of the book that we've built to date as well.
Okay. And this is the last couple of questions, but the whole investment by Mizu Financials in Credit Saison India, investment came in February. You've got Credit Saison already a very strong backer of the company in terms of balance sheet strength, and then now you've got the third largest bank in Japan also backing this company. What is the idea behind bringing in someone like that into this company, and what exactly is the goal for both the entities?
Sure. I think there are two points here. So one is India's potential is so huge, and then keeps on growing. And as we see early success like this, we need to think of like 10 years down the line, 20 years down the line, how big it can be.
Yeah.
And when we think of that growth and scale, we thought, yes, we are big in Japan, but for that long-term, scale, I thought we needed another big, especially bank, who join forces and share the long-term view to really support this, growth from a credibility point of view, from the long-term vision point of view, et cetera, et cetera. So, and then naturally fits, because we're from Japan, all the Japanese financial services are very much excited in, coming into Japan. And so it also matches Mizuho Bank's sort of thinking and strategy, especially on the retail credit side, SME credit side. So again, from our point of view, from a long-term scale, how to support it, that's one aspect. And secondly, we surely create synergy between the banking license and the NDTV license. So in the near future, I think we can do a lot in this. So largely two things: how to support the scale that we want to achieve, and then the synergy that we can create between the two different licenses.
Okay, Pressure, final question. You've got already a strong balance sheet, but you've also got backers who provide that nice big capital buffer to grow your business here. What do you intend to do with this? You've given a 5-year sort of a midterm strategy view, but let me say 15, 20 years. What is your intention with the company?
Sure. So I think, as I said, right, I think we have this amazing platform because it's a great combination of, very sort of strong, rich parentage. As Morrison mentioned also, with Mizuho coming in, it really sets the path of what we can become, really big as well. I talked a lot earlier in terms of, how we've built out the asset side. But I think another very big strength is definitely we've diversified the liability base as well, right? So today we have about 30 odd banks supporting us. We're a AAA rated entity, so that also helps with the cost of funds advantage and everything in that sense. I think if you ask, definitely the vision for the next sort of, 15, 20 years, we definitely want to sort of get into becoming one of the top 10. But, I think what is going to be very unique about our story, we've gotten the chance to, build it from scratch. But it's this very unique combination of, a promoter that has come from, outside with the local management team. And we believe we can build it, in our own unique way. That localization term actually resonates very well. But I think it's something that, we are really committed. We want to build the business to be sort of, one of the sort of the top 10 NBFCs here in sort of the 15, 20-year mark. And, really build it out very nicely in that sense.
All right. Thank you so much, Morrison and Prasha, for joining us in this conversation. Pleasure talking to you. Thank you so much.
Thank you so much.